So we will start with our guide, which of course is Asia range, and of course we can add additional components like the Asia high and low. So what is going on here and what we're going to do here? So it's easy as it sounds, nothing you don't know already. Like look at Asia after it's closed, and this will provide you with, of course, the high and the low of the session. And sometimes you will see that price induces out of it in one direction and then comes back to retest these zones, because you always have to understand how the concept of these breakout traders work of those. Like say, like if you look at this illustration in here, you have Asia session and breakout fish is of course entering of the breakout of Asia. So of course, the moment they're getting in some profit, some of them getting at break even, and that's why price a lot of times comes back to stop these people out at break even and then continues higher. And you will see that a lot of times, and we of course can take advantage of that. So how it can look like in charts, it's very easy. You have minor inducement here, right? Of course, then price rallies up in London trap, but you already can guess that this will probably be an retailer's heaven or hell in that sense, but obviously what you see in here as well, we're having our touch of Asia high to induce or whatever to get rid of those people who took with the momentum trade in here, getting the breakout out of it, right? And retesting it also gives us a let to confirms the continuation, right? So Asia high bounce in this sense, we have an let, and of course it ranges to build even first the reaction here, finally gives the minor inducement in this area, right? So build up in here, minor inducement low, also Asia runs, everything happens around this Asia session high, right? So a lot of liquidity around there for some reason. And of course, now we're looking at the clock. When does the final manipulation minute happen? Down these areas, it happened at magic manipulation minutes. Of course, it happens like clockwork. And of course, they're channeling upwards. What do we expect? Of course, the tube even higher. When does it happen? New York trap time, and then goes lower. And as you already can see, what is going on here? London close. What does it do to all these sessions in here? Creating a huge EDM. London close. What should it do? Mitigate their positions out of it. So we expect even higher just by the entry alpha in this stage in here. Makes sense? Just adding confluences slowly and surely. Then we have something like the Asia midline. That becomes very powerful if you want to trade quick inducement trades. Like they're really amazing. And how you will use it is, again, it's easier it looks. It sounds like Asia midline. You wait until Asia session is closed already. And then you have your midline, which is also in the indicators for you guys. You can turn it off and on if you don't like it, but you definitely should keep it on because it again gives you a pretty good confluence of where the liquidity lies. So it requires a bit of backtesting and practice though, but as you're more getting experience with it, it gets very, very clean and you should know what to do. Yeah, yesterday was a picture perfect example for that. And of course, how we can use it as additional confluence, we will use it like this. So sometimes they break out of it, minor inducement, they're building liquidity in here, right? And then of course, induced internal liquidity downwards. And believe it or not, we drew this picture like a few months ago, and this is exactly what happened Friday on EU, like to the absolute perfection. Okay, of course, you're always looking for these internal buildups. This liquidity of the Asia range, if it also lines up with imbalance zones above liquidity of the minor inducement, which also can confirm the internal break of structure, this becomes very, very powerful. And you're looking again, same thing, into the break of structure, inducement, into the mitigation. A new additional confluence now will be, of course, the Asia midline to confirm that there is actually liquidity there and it makes sense for them to reverse in here. But of course, you're combining the whole lit cycle plus the structure plus the break of structure in here. Then, of course, you're aiming for the next liquidity zone in here. That is variation number 1. Okay, so write that down. So variation number 1 is where they induce out of Asia first, and then they come back with the liquidity and taps into the Asia midline after that, and then continues higher. That's variation 1. Okay, so looks like this. As you see, we have a break of structure in here, also minor inducement, right? So we're channeling upwards, right? So of course, first of all, you can trade the inducement trade in here later on, but guess what we have? We're building equal lows in the process. What do we have? Channeling upwards, inducement into what? Imbalances left. Look at all this crazy liquidity forming in here. Left the imbalances perfectly. Asia midline mitigates it. When does it happen? Magic manipulation minutes, and then of course shoots upwards. What do we have in here? Like this was a 5-minute let. You see the let is very high in here. So you see this is the inducement after the perfect cycle. Build up, inducement, mitigation onto perfectly Asia range. That's the first 5-minute let, very high though, but it also was a 1-minute EDM in here, right? So perfect, and obviously channels upwards. Same thing all over again. Trading the reversal now into the break of structure in here, taps back. Also, guess what it is? 5-minute let in here. So you're trading the mitigation of this 5-minute let until obviously price channeled downwards because it was Friday and liquidity was low. Okay. Makes sense. And this, by the way, is Friday on EU. So yeah, it's it's not that real that stuff like that happened. It's just getting clearer and clearer and clearer and clearer. Okay. So this is like how it looked on the M1, for example, and again, how you would actually can start trading it. It's the same thing on the M1, just refining your zone a little bit more deeper, like here, obviously as Weka showed you earlier. You're finding your M1 imbalance zone. Same thing, same place. Then again, what do you have in here? Build up, inducement, break of structure into the mitigation. What is it on in 1 minute? It's a perfect EDM, confirming this trade in here, looking for upside. Okay, then again, what do you have? Build-ups in here. First of all, you would expect like inducement to the left, but as it was Friday, liquidity went lower. You don't do anything until what? Break of structure in here. First of all, that comes back to mitigate the extreme, which is also, guess what? The inducement candle in here. After the break of structure, it comes back, induces internally, comes back all the way to the extreme, makes new lower lows. Awesome. Taps into this zone in here. This was the 5-minute let. Guess what it does? Comes back, mitigates in here, but then again, day was over, week was over, just was ranging after that. Yeah, and the EDM in here, that was also a 5-minute EDM, but again, this is really hard to take if it's like so big, and then again, you're coming off this trap in here. I would not recommend to take that, but it's important to understand still that on the 5-minute, this was the EDM. So you at least understand like why the reaction happens and why then it's now trapped between the let and the schematic in here. And of course, like the EDMs and the mitigation here. So that's why it just goes sideways. Okay. So it's trapped between two liquidity traps. Make sense? Again, this is a perfect example for an Asia midline trap, but there's like hundreds, multiple every week. So anyways, so pretty much what you're going in here. Sometimes like this, again, what we do, sometimes we have an inducement of this area, but again, it's the same thing all over again. What do we expect in here? Of course, this is our minor inducement. So what can we expect? Mitigation into London. After what? Minor inducement, trapped liquidity low, taps into Asia range, goes higher, goes to the final mitigation area, the decisional area in here, mitigates, London close, London open, and of course you expect the tube right after. Then we have a variation 2, that these are very juicy trades, by the way. So that is when you don't have an Asia inducement of any side so far. So yeah, it can become an inducement, or if it's clean, a mitigation. Okay, so mitigation is obviously better if they're clean, but of course it can also induce like the structure if there's no mitigation. Okay, but if you have build-up, inducement, and a cover, it should be a mitigation. Then you have variation 2, where Asia high is not induced here. You see, you have all these liquidity buildups in here, never induced to any side, but out of a sudden, it started to making these traps in here. Can be a perfect buildup in here as well. Then again, it's the same thing. You expect the inducement into either if the buildup happens here, then you expect the mitigation in here, or there is no buildup, as in this example. You expect this point also to be induced and then goes higher, and you're trading, of course, in the 1 minute, the break of structure in here, and the mitigation of the inducement higher. And then you're trading literally into the inducement, and that's all insane trades because you're immediately getting like 1 to, yeah, even up to 1 to 10s immediately in one session, as they're really, as you saw, the inducement candles are very quick, and you just need to understand that you need to get out of them because they will reverse on you very soon. So what does it look like? It can look like this. You never induced Asia high, right? You're building these equal highs in here, right? So what do? They're building the liquidity in here, gives the false break of structure. When does it happen? Perfectly in London midline. What else it did? Right. So first of all, we have a lit cycle build-up inducement, right? So we're looking for liquidity targets, right? So awesome. We know that we should go up, right? What else do we have? Of course, we have a bounce of Asia midline after the build-up inducement. Nothing to mitigate in here, right? Mitigating for long sides, but there's no mitigation candle in here. So we can't trade the extreme, right? So no mitigation here. But guess what it else is? It's a let also. Perfect, Lewis. Very good. So guess what? There's your tube confirmed with all the stuff we had so far. Asia range never got induced. Build up, inducement into midline gives the perfect let. And you're aiming for liquidity zones for quick and easy trade in there. Okay. Then what we have in here, same thing. We never induced Asia to any sides. We have huge liquidity here, huge liquidity here. What are we trying to do in here? Of course, inducing one more time high, Asia midline, and then give the tube afterwards. What we have then, of course, we have timing, and now we're ready to tube everyone in here. So you technically can take this short in here, then you're looking for break of structures, and then something on the 1 minute after in here, or again, anything on the 1 minute in here or in here in terms of lets, but on the 5 minute there was nothing. Okay? And yeah, by the way, that's a very good point. Like these EDMs, again, EDMs become completely invalidated if you're trading into the full cycle. You see, like this is the build-up, false channel, inducement, huge vector candles. So maybe if you see this as an EDM in here, of course, like that's why price action always comes first. Like first of all, that's not even a clean EDM, but just in case you would see this in EDM, no, that's huge no-no-nos, because again, this is completely trading against everything you learned so far, and you should never do it. Okay, so always price action first, and again, if anything after this happens, you're looking for EDMs in here or lets in here, whatever. Best case scenario, again, break of structure, mitigation of the inducement, with being a let, something like that, and then trading EDMs after. So an easy one, why not? So what we do the 50-minute view. So what do we see already? Asia range is just building up. Okay, so what do we wait for? We wait for obviously something happens, either Asia midline. Okay, so what do we have in here? So they're giving like whatever crazy lets, which I would never take, but just for understanding that they actually want to go lower, right? So we have an imbalanced zone at Asia midline, which is obviously amazing. So they're tapping in. Now this becomes very juicy because what do? They're tapping in, channeling downwards, tapping in our perfect time window, giving the buildup into the inducement, into the mitigation. Perfect. So cycle completed. So of course we can expect something like this, right? Of course, gives me a huge reaction, right? But now just in the middle of nowhere, right? So we cannot do anything until, of course, we get something like mitigation in here, but we just channeling upwards, and this becomes like a retailer heaven, and we just need to look for trading opportunities later. But at least for this examples, we need to understand like the trade leading into it, which is the Asia range, never got induced, false channeling downwards, build up into the inducement, into the mitigation. Then of course we're looking for buys all day after that. This becomes retail level in here. Okay. Then another one, 50-minute completed the day view, right? Like this. So pretty much again, what do we do in here? Not really anything. It's just again, why does a channel? If you look to the left, there's nothing where price should have reacted for. That's why you don't expect like a New York reversal or anything, because again, look to the left, no, to be right. Again, there's nothing that should make price reverse. That's how you can expect these retail heavens sometimes as well if you're in the middle of nowhere. So let's look at a more advanced one. Okay, so again, what do we have in here? We have already a smart money trap. So we're building up liquidity to the downside. So let's cycle build up for inducement. Awesome. Okay, so building up at smart money. equals inducement past to come, of course, right? So manipulation minute induced the inducement pretty much, right? Can happen too. You notice variation, but London happens here, right? You have your inducement of your pretty much inducement. Okay, so what else? Where's the next point we want to go look for? Build up smart money trap into inducement of the mitigation. Okay, again, there's the liquidity area to the left, right? So that's how they trick people all day long. You're looking for only the valid liquidity zones, which is of course Asia midline after smart money trap, after wrong cycle, not even taking out liquidity to the left. Okay, so you expect of course the tube inside here, building up false equal lows in here, just trapping retailers even more. We wait for our perfect ideal time window, which of course is London now, equal lows, sorry, New York in here, New York trap time, build up, inducement into these areas, and of course we expect the tube in here. The EDM in here? No, that's not an EDM. That's lower.
We're talking about the mitigation zone above the SMT.
Oh, this one in here.
Yeah. Is that considered an EDM as well?
Yeah, technically, yeah, but again, as we said, like it's better if it's like just 2 points and not like something like this in here and then this, right? So that's not nice.
Okay.
Because you're confusing yourself too much, right? So always like take this point and not like so many points in between. Okay. But yeah, if you see this one, it's technically fine, but again, it's not really that much of confluence. Again, the most confluence is the Asia midline in here, into the false channeling, smart money trap, into the mitigation, and then going lower to the liquidity. Okay. Then what we have in here, easy one again. We have our minor inducement in here, channeling upwards like crazy, building liquidity, right? Finally getting an inducement into what? Perfect time window, right? London open, inducement, mitigation after that. See that left little imbalances below here, perfectly tapped into there. So awesome stuff. So we expect a quick tube, but guess what? Now we know that this is our into the inducement trade. So guess what? The cycle is pretty much finished. So what we're looking for, of course, we're looking for a tube to the downside. Make sense? Maybe another one. So let's say what else is that going on here? First, we're having the tap into Asia midline in here, right? Before we went lower. Okay. So guess what? We're having our perfect cycle to the downside. We're having internal break of structures into the mitigation of the inducement, channeling upwards, upwards, upwards. With the news, they give an inducement low to go even higher, right? So guess what? They're going to retest. All these people have breakout traders in here. They want to come back to give them a retest to go higher. So Asia midline, Asia high, just all liquidity zones, okay? Then of course, what do we have in here? Nothing you would trade like, but look at this point and look at this point. Again, are we done yet? Are we looking for here for a sell? Obviously, if you look at the entry helper, look at this point, look at this point, look at this point, look at this point. Should we look for a sell in here? No. EDM will fail. Okay. See, this is the EDM in here. That keeps you out of these unnecessary losses in here. Okay. So another one that a few days ago, of course, if you take the overall picture of just liquidity zones of Asia high and Asia midline, it's the same thing all over again. So what do they do? Again, in case in here, building up liquidity, never induced Asia, right? Just using this one at this point. That's a kind of a weird one, but it also was an EDM. Okay. So you can take this one for the buy side. And again, what do they do? Smart money trap into here, channeling downwards, tapping off the Asia midline. When do they do it? Perfect timing to create the final tube with the inducement. When do they do it? Timing continues lower. So this, of course, becomes your first decisional until they break in here, right? So this becomes break in here. So we have Asia range created here. Same thing all over again. Ranging upwards, building up liquidity into inducement, into the mitigation in here. So that's your buy trade, channeling upwards. This, of course, becomes your first smart money trap. When does it happen? Magic manipulation minutes. Taps back into what? Asia high, exactly as they did it here. It's a exact play, isn't it? exactly the same thing. Even the timing, look at that, it's the same exact thing all over again. Taps into Asia high in here, trades higher into the proper mitigation zone. Now, when does it happen? Perfect New York timing, taps into the mitigation zone, which also was an EDM in New York close, and that's your reversal for the day. Next day, Asia got induced to a low side. When does it tap into here? What does this mean? EDM trade makes new low lows, right? Perfect. Never took out any liquidity to the left. So channels upwards, timing to the minute, taps into Asia liquidity line in here, mitigates above the inducement areas. Small my trap, continues lower, and Luna close makes a reversal. So now if we add in the entry helper, it makes the whole thing even clearer. As you can see, why did we take this trade in here? We would probably not, because it's Asia low. What is the main reason we can take this trade? Build up, inducement with vector candle. Look at this huge EDM in here. Right, so that's the only reason why we would consider this as a trading opportunity. Build up, inducement into the mitigation, also confirmed by the EDM, and timing to the minute, right? And of course, huge channel upwards. Same thing in here. Why would he take this trade? Of course, we have like equal lows in here, but then London open gives the false trap into this mitigation zones, becoming an EDM. You never trade against the cycle because again, you need to take out liquidity first. You never did. So now you're coming here, inducing higher into Asia midline and then continues lower. Okay, slowly but surely. So then we have easy stuff. We have like another liquidity zones, which are also very important to use. Let me just put my presentation mode again. So we have, of course, like stuff like weekly highs and weekly lows. That's always important areas you need to identify. Like again, it's easy as it sounds. Inducement of last week's high and low, or current week on high. That is a lot of ton liquidity. So of course, breakout traders love these zones. Again, like if the weekly high or weekly low gets induced or gets broken, of course, that is on a bigger time frame, a huge confluence for most retailers. So that's why there's a lot of liquidity and you should expect them to be broken. Okay, for example, if you have a weekly high like this, you should never expect like a mitigation of that. Okay, because usually they always get induced. So you expect an inducement of that and then you trade the mitigation of the inducement afterwards. Okay, so all these liquidity zones, like even Asia, yesterday highs and lows, they always should be induced and not giving you a proper reaction because they need to take liquidity out first and then of course getting the wrong direction. So again, if you even see here, very easy stuff. Again, what do you expect? In Asia builds right above the weekly low here and also like last week's low. Of course, you expect a huge inducement with vector candles into this liquidity, getting everyone to the sell side, and then of course reverse on the rest of the world. And when do they do it? Of course, in London Open. And that's your let in here, very high, of course. Nothing can really trade, but at least you can understand it. All right, so weekly low tapped in here, then finally gets broken with speed, vector candles, timing, perfect lit cycle. Of course, you have your build up, inducement with vector candles, perfect stuff. And again, you will never get an inducement here, a mitigation here. That's just huge inducements with speed. That's again why you wait for the break of structures and trade after away from the trade, from the trap. EDM with loss. No, okay. So first of all, like there's no EDMs in here. EDMs are confirmation trades for if a play is done. Okay, again, I will show you exactly later because I think some people still get a little confused with the EDMs and LEDs, of how we use them correctly. So don't be bothered about it right now because we will clear a little bit further in detail, I think. Okay, but again, you see the bigger picture. Same thing here. As you see, like huge liquidities of weekly highs and stuff like that, never expect a mitigation of that areas. Always expect an inducement. And it usually happens on time. And again, you expect with speed, and then expect the reaction of it later and trade away from that. Okay. Again, huge liquidity of last week's highs and weak. So guess what? We zoom into this area, right, under M5, for example, like this. Right, of course, the whole cycle already looks very clean. As you can see, we took out all this liquidity on the left with the weekly highs and yesterday highs. Everything got induced in here. So induce pause liquidity areas of everything pretty much. At this time, timing is also perfect. Pretty much to give us a short opportunity in here. Some traders are already getting in based on diversion, so that's not good, obviously. So retailers see this false reverse diversion type of thing in here, right? So question, what do we do? If we just touched it but never took it out, should we take a short here based on the support, on the resistance, or should we expect an inducement? Of course, easy question. We expect an inducement. Finally, we got the inducement, right? And of course, now we can trade away from that, right? So this is our inducement, which is past all the liquidity areas. And of course, trade the mitigation based on that. Okay, awesome. Mitigation here, this becomes your first let, right? And of course, you're trading away from that smart money trap, taps into it, finally gives us our mitigation after break of structures, right? So smart money trap first, comes back, induces, mitigates the extreme, which was the inducement of all the weekly highs. Perfect. When does it happen? Magic manipulation minutes. What is going on here? Creates a perfect leg as well, right? So full mitigation, inducement of the smart money traders, let, timing, and of course you're trading away from a weekly perspective, liquidity area, right? So are you seeing it yet? And of course you should be dancing like this already. Of course, we're getting a final move for this day, right? Of course, should be like this. So then we have easy stuff as well, which is the day open, which is also an important area you should look for. And it's, again, it's easy as it sounds. So you use the day open price as a confluence point. And pretty much how it works is there's trap liquidity that during the entire day. So pretty much when the market's open, of course, like all these institutions and everything, these funds and whatever, they're starting to open up their positions the moment the day opens. So that's why the day open price always have liquidity and you can use it for confluences of events. For example, like this. If you have a minor inducement, then sometimes maybe it does not tap perfectly in here, but it comes to day open price. Okay, so it can look weird like this, but again, at least you understand what's going on. If you see here, you have huge liquidities to the left. Asia Midline already got tapped, and usually would expect an inducement low, but for some reason there was so much liquidity in here that it's just enough to push price higher as they're getting out of their position. So it taps in here, and then it continues higher. We would not trade that by any means, but at least we understand what's going on because you will always have the day open indicator always in the charts to understand price a little bit better. Okay, so of course, and then we're taking out the liquidity to go higher. So first it should look like this a little bit, right? But hopefully it's starting to look like this a little bit because again, charts should get clearer and clearer as the more confluences we have.
So for like yesterday's highs and lows, is that something that you kind of take in consideration with what way the market is trending, or?
Yeah, so let's assume you have something like here, and this is yesterday's high, okay? And then a new day starts in here, Asia range. You should not expect a mitigation here and then go lower. They usually go for take it out and then you expect an inducement. So you would never run a limit order in here for the extreme. Again, it's a different scenario if they give you like this same exact play. This is yesterday's high. Asia makes here, taps in here, and you have an internal break of structure, whatever in here, and then you mitigate. That's a different scenario. But you should never run limit orders, never on yesterday's highs or weekly highs, because usually they're just getting induced. And then you're going lower. Okay, so that's how you use them as liquidity targets and never as like points of interest targets. So if you see a weekly low or high, always expect it to be induced. With yesterday's highs, it's crazy. I think there's rarely a yesterday high or low that actually holds. So you should always expect them to be induced. Okay. So the question on this one on 233, what is that about?
Can we enter with let or no?
Yeah, so here, as it's not clearly a let, you should wait until it's very clean because again, you're not mitigated price properly.
Okay.
It's too big for, I mean, you can enter it on the 1 minute in here as you see, but then again, be patient about this because you already know what happens. Why does this happen? Again, why is this a smart money trap, but why does it react? See this point in here? which is the let in here. But guess what it is? It's an EDM. But
Okay.
of course, just signalizing the smart money trap. But of course, that makes sense now that they push price higher. Then again, creating a smart money trap in here. And now finally, you see, this is the mitigation now. This never mitigated it here, right? You see, never mitigated it. And now look at this. This looks better. Okay, this is now a let. Also, the equilibrium line did point upwards here, so did point downwards in this area. So you expect even a smart money trap with the EDM. So technically you can trade that. And guess what this is as well? So you have inducement high here. That's Asia high. Creating the imbalances here. So of course they retested, giving the false illusion that again, price goes higher. Smart money trap being an EDM to confirm it though. Oh, sorry, this one in here. So you expect a reaction, but your bigger play is of course the mitigation here and go lower. Confirm with timing, price, the whole cycle, the mitigation, everything. Let, awesome stuff.
I just wanted to know if that was a let on the first day on the entry. 1 second. Right here between, well, I guess the timing doesn't add up, but
Where you looking?
I was looking in between 950 and looks like 1550, where it touches the
Which
line.
day? Which day you
On
looking?
the first day, on the first day.
First day.
Where it comes down, touches the equilibrium.
Oh, you mean this let in here? No, that's not a let. I mean that. Okay, so let me tell you, because we need to think a few steps ahead. So what we will do and how we will use lets. So very important for everyone here. So you know our basic play, if you have like liquidity to your left and have like whatever, let's say like build up, inducement, and this becomes a point of interest later, right? We know that. So let's say break of structures in here. Now, again, this becomes an area for us anyways. Okay, so this is already a point we're looking for buy. So now if this is a let, we consider it. If a random let happens over here, we would never even consider it. So the let is only important to us after our normal play in here, right? And the next thing will be, guess what? An EDM. So that's the only order we'll use lets and EDMs. So we have an extreme, then we have a let and an EDM. But the price action will still be the exact same. So nothing changes at all. We don't want to confuse you guys with like random now stuff. It just is the same thing all over again. If we enter charts, okay, we should not like take a random let or EDM in here because like it doesn't blend up with our whole picture. Our entry approach will always be this same rules. But again, this can become a let to get even more confluences, and this can become an EDM to give you more confluences. And again, this is a very, very repetitive pattern they do all the time. They show you always the same. This is so many times a perfect let. This is so many times a perfect EDM. And that just gives you certainty to trade it with, again, more confluences. Okay. So for example, this isn't a random let in here. Like, why would you trade it? Does not give a mitigation to anything. It is not a significant point in price. It's not even a decisional, nothing. So you completely ignore it until you're in a significant zone again, which makes sense. For example, if they tap in Asia high, which is a liquidity zone, and then you can check, oh, maybe it's an EDM in here. Technically is, but nothing really would trade, but at least you understand it. Then you look at the 1 minute, wait for break of structures here, mitigation, and then you trade the tube. And you know, okay, inducement to the left, awesome. Timing is not ready, that's New York open. Timing is ready now, awesome. So now in here, if you zoom that out into the 1 minute, what do? It's the same thing. You have an inducement, right? Whatever in here. So this is the 5 minutes. You zoom in, 1 minute M1, right? So this is the M1. Wait, break of structure, mitigation, becoming a let, awesome, and this becomes an EDM. Extreme, let, EDM. It's the same thing, just with more confluences. Make sense?
Yes, thank you.
Awesome. And we will cover that in depth, by the way, because it just gives you so much confluences. It's actually ridiculous. But again, now it can be a little bit confusing, I understand. But yeah, we will get there because we have still a few to still cover.
No, not really a question. I just had to write it down.
Okay. Metric reversal. Yeah, like some people asked about like the weekly cycle and stuff. It's the same thing, but I don't really like that in terms of like, but the intent is always the same. They start the week off Monday, whatever, ranging a little bit, building up liquidity. So technically Monday is the Asia range of the week. And again, Tuesday usually gives the false move. And then Wednesday, Thursday start the real move, and Friday is kind of the reversing move. It's like literally always the same anyways. Of course, they switch it up a little bit, but yeah, the weekly picture is the same exact shit anyways.
Ray, I actually had a quick question.
Sure.
So daily open and Asia open are pretty much the same thing?
No, day open can be in the middle. As you check your indicator on the trading view, let me actually show you. Oh, no, I'm in the drawing mode. There you go. So you see this dotted line in here is the day open, right? For example, if it gets retested, it makes complete sense. Again, this day open here, right? Again, it directs here, whatever. But then again, what's the most important thing? You're getting the break of structure finally. Then you're expecting a retest of the liquidity area. And again, if you check that on the 1 minute, by the way, and again, what is it? It is, of course, an EDM. So just to confirm it even more with the liquidity, you see this dotted line, right? It's just weird that they do it and they just give it away so easily all the time. They just react from these liquidity zones all the time. They break it, they retest it, creating a let in the process, creating mitigations, imbalances in here. You see, it's just adding so much more confluence because again, this is a like quote unquote a random EDM. But if you just look at the liquidity zones and like the intentions, like this is the first break of structure, left imbalances here, becoming a retest of the day open liquidity, becoming an EDM, also a let. Of course, you can trade it upwards. See, it's just adding confluences. See what I mean? Away from, of course, the daily cycle. Inducement low, trading in line with the thing now until the next liquidity zone.
You can use that same point on like the Asia highs as well as the Asia midline.
Exactly.
Same technique.
Exactly. So from they're breaking out here, the EDM is created in here. Of course, it's just additional confluence later. That's how we're using it to, but again, we don't use it as an isolated concept. Use it in a combination of everything. You need to understand, like, first of all, that's why we started slow. If you remember, we started like inducing low, going higher. So now all of a sudden you understand, oh, okay. So I now not only inducing low to go higher, you understand build up, inducement into mitigation. Ah, okay. So then you understand, okay, build up, inducement into mitigation, but timing. And you look at the clock and look at it, it's to the minute. Then you understand the next thing, oh shit, build up, inducement into mitigation with timing, but I wait for break of structure mitigation. Awesome, but now it didn't happen, so what happened instead gives you an EDM on the 1 minute here, and this becoming the let, not really here, clean. And let's check on the 1 minute again. And this becomes the EDM in here, because sometimes you just don't get the mitigation above here, but it's just variations to the theme. Now you said, okay, I can trade continuation trades, getting my break of structure on a bigger picture. Awesome. This is the push that led to the break of structure, left imbalances. When does it do it? With liquidity lining perfectly. What is it? Let and EDM. I take that. Awesome. You see, we're just combining stuff slowly but surely. We started slow, but you're adding everything together. But we understand the bigger picture, and now we're moving slower into the lower picture and combining it with the overall picture. Okay?
Gotcha. Thank you.
I'm sorry, Reem. Can you please go back to 237 just for a sec?
This one? Yeah.
Yeah.
Sure.
Graham, I have a quick question.
Sure.
Maybe we're gonna, I don't know, touch about this topic, but how much do you take off for percentage, let's say, when we are take profit, the first take profit?
Okay, so you should never base it on percentages. You always base it on structure. For example, are you done with the slide, by the way? I think you're all right. So then again, let's say, for example, here, like, let's say you actually entered the extreme area of the limit order in here. Awesome. But why would you take a percentage? Like, where would you need to look at the left in order to understand like where you take profit areas are? And we will dig a lot into it on day 5 and 6, where we actually show you like the whole trade mastery and where your logical take profit areas are. So if you want, for example, like your first take profit area in here, like on an intraday perspective, is of course what? Asia high. But now again, you're combining the bigger picture and you're saying, okay, technically my next target area is the next liquidity zone to the left. Awesome. So this is this one down here. Then you're expecting the bigger time frame. And of course, this is internal, as you can see. This is the whole push. That is internal liquidity. So guess what? Out of a sudden, your liquidity for target for this trade in here becomes this liquidity. And out of a sudden, you improve from making a target here to target here, but the logical target is in here. And the timing, of course, makes sense. Look for reversal, never got a break of structure, but an EDM instead. Awesome. So if we're saving out this trade in here, no sells in here because you understand this is an EDM. With what? Timing, perfectly on and close to the minute, mitigates the position on the 1 minute perfectly. So expecting even one push higher. Then the week is over, done. Understand? Like, but for targets, of course, start slow, get a feeling for it, then move to the left, look a little bit bigger. And then again, you understand that this is internal liquidity. The next liquidity area is here. So they take out this one. Okay?
Okay, thanks.
Beautiful.
Hey, Rim, can I have a question?
Sure.
So basically, if you are not able to like recognize if the price will retrace to your like decisional or extreme, and if you are looking to enter on a let, I'm sorry. So basically, when you go to the 5-minute chart, the let setup will like tell you that the price is not retracing to the like your extreme point or whatever. Can I use that?
Technically, but you should not trade. Like, let's say you have like a normal play, like always, right? I mean, your inducement here, you break a structure here, and let's say this is your point of interest, right? But now, like, price is here, and this creates the let, right? Is that your question?
Yeah.
Okay, so let's say this is the let in here. Like, you cannot take it randomly in here because again, your stop would go all the way down there. So that's why you're not trading in here. But again, you wait for confirmations, like break of structure here. And if this now becomes an EDM or something, that's valid to take because your point, your stop loss point is here then.
Yeah.
That you can take, but not in here random lets because the stop is way too big.
No, I didn't like mean that. I'm just like using my brain to literally how to use the entry helper properly. Or
okay, so let's say this is the extreme entry, our first approach. Again, after this one, after we're done with the questions, I actually show you the entry approach, then it should become a little bit clearer. So again, this is the first approach. This is the second approach if it gives a mitigation. Like let's say this comes here, that's the second approach. And the third approach would be an EDM. Okay? And again, you only line it up with proper mitigation zones. So again, if it's clear, but not mitigates, you just miss it. Because again, you should not like, let's say this one and here was a let, but then again, you say, oh, I don't want to miss it, but my stop is so big. No, you should, that's just you understand why it will push upwards. But again, it's not worth it to take like such huge trades. It's good for the understanding, but again, you're waiting for clearer and tighter entries like EDMs or mitigations of that and stuff like that. But you should not chase the trade like that. Okay?
Yeah, I understand. Thanks.
Awesome.
Sorry, just a quick question on like this is a GU on the left. We're looking to take out the liquidity, like the final like logical place the TP is up there, like because of the high, right? But how would you look for any supply zones in there for a potential reaction based on structure? Because that's like the lower high that made the lower low. So
Yeah,
would you look for any like reversals and stuff?
That's a very good question, but again, it's more about the intent. Like, what do you have? You having some slowly return from starting from bearish to bullish, right? Again, and that's why you expect that, and you even can see the order flow type of how it plays out. You're having an inducement here, then it makes internal break of structures, and that gives you already a way that on a bigger picture, you're starting to move away and making new higher highs in a bigger picture. This is your inducement. Guess what that is on a bigger picture? Internal break of structure comes back, mitigates your decision on here because the extreme is already mitigated in here. Then again, this becomes the push that led to what? The next point in here. That becomes a smart money trap later. Extreme becomes the valid pointer next day. But again, you already switched the momentum from bearish to bullish. Just give it away with this one. Building up liquidity, inducement London, perfect. And then I can slowly start transaction over. Plus the whole week was just, again, it's exactly how we said. This is Monday. Monday, false trend, Tuesday reacts, Wednesday, whatever, mitigates it, then there's a huge run, whatever, this is Monday, I don't even know. Then again, huge reaction, and then Friday pulls usually back. So it's a bigger picture, but again, you just need to follow what they show you, not what you want to see. Then, again, if you see the session over, the trend changing over, from bearish to bullish, with the internal breakout structure starting here, getting mitigation, order flow, build-ups, inducements into mitigation, and then you're aiming for the next logical liquidity zone in here.
Okay, so basically, if it's like constantly mitigating all the stuff on the way up, and it shows like efficient pullbacks and stuff, we can assume that any quote-unquote supply zones in there will be taken out because it's become liquidity because we're shifting because all the mitigations and stuff. Okay.
Exactly, and then you just line up with the sessions, of course. Again, like here, you see this from 10 miles away. It never got mitigated. What does it do? Build a smart money trap in Asia in here, and again makes the build up perfectly. What you expect, an inducement into mitigation. Then, of course, to complete the bigger picture, you need to make a new higher high in here. That's the internal. So you're just expecting it this anyways. Okay.
All right. Also, just one last one on just G and stuff. Would we look to the left for any demand zones, any like maybe weekly lows or something like that, liquidity to take out?
Yeah,
that's
technically
why
you can, but again, it's so far away. If you see, like, I don't like to do that because again, it's so far away. Like, yeah, if it's like that crazy, and that's a 4 hour, by the way. That's like whatever, a few months ago. Like, I would not like pull randomly shit out of there. Just play with the intraday play because if it's so far away, and it makes sense if it's like close in here to the left, completely makes sense, but not like if it's like so far away to the left.
Okay, all right, thank you.
Awesome.
Are we able to change up these settings on the timing indicator?
Yeah, you can. You just click in here, this wheel, right? Settings. Then of course you can do whatever you want. You can change colors. You can put the magic manipulation off. Where you can put off Asia session. You can do all this stuff. And also you can say, first of all, like weekly highs, for example, if you want more clarity. For example, here yesterday's high, so now I see exactly. By the way, even this one, like yesterday high, of course, you expect it to be taken out. You see this point is now the weekly, right? Whatever. You see, like it adds all sorts of like indicators for you if you really wanted to. And then again, you can also change the visibility. So let's say you don't want to see it on the 1 hour, and you just put it off, and then you don't see it on the 1 hour and stuff. Right? You can do all stuff with that. Just want to keep it clean for you guys, so I only have that on. Okay. Okay, let me just read two chats. Just repeat the weekly direction thing. Yeah, so weekly direction is the same thing. You can expect it like Asia. So again, Monday is usually Asia, Tuesday induces it, Wednesday, Thursday just continues, and then Friday it makes the last reverse a little bit. It's always the same shit. But again, that's just a rule of thumb. We're not swing traders in here, so I cannot give you like a proper swing trading thing. But usually that's what they do. So will you consider that a main VOS? Which one in here? Yeah, for the week, yeah, sure. But again, on Monday opens, it's always a different scenario, and you always react anyways. Again, as Alex explained pretty good, it's always what Asia does. Where Asia plays, like lies a play, and then you base it based on the play they show you on the bigger picture. But I will give you a breakdown on GU tomorrow to combine the higher time frames. You will see things a little bit more clearer. And also we dig into Mona Lisa trades, because again, a very important point for everyone in here. It's not your point in trading every little push and trying to catch every little move in there. You should focus on Mona Lisa trades. So for example, this in here, it's a Mona Lisa trade on the extreme, but it never gave a proper mitigation in here. But for example, GJ, GBJPY, in this day, for example, that was an absolute, we even covered it on Friday. That's absolute Mona Lisa trades where every single one of you should take them. If you have, again, build up upside, what are you doing on the higher time frames? I will cover that more in depth tomorrow. What does it do? Like this is the extreme that did what? led to the break of structure, but first of all, building equal lows in here, but then broke. So this is the extreme in here. You have a clear IFC candle in here, right? So obviously, guess what happens? Asia happens in here, taps perfectly into this point in here. When does it happen? Perfectly to the minute, right? On the extreme, so you have your extreme entry, but guess what? If you miss the extreme, no worries. You can switch over to the 1 minute, right? Guess what? You trade the mitigation off, and look at that shit. I mean, I wanted to cover it tomorrow, but not bad to give a quick sneak peek. But guess what that is? You have your inducement on perfect timing. You're having the equal lows being built. Imbalance in here. What is that thing? Look at it. It's a perfect let. So you take this trade instead. Huge reaction, but then you switch time frames again. Look at the internal structure, what's going on in here. What does it do? Breaks internal structure, leaves imbalances in the place. Look at this thing, mitigates it. What is it on a 5 minute? It's fucking cheat codes, guys. It's fucking cheat codes. I mean, structure is clean, but if you combine the lets, as you can see here, like that thing is a perfect mitigation, but it's also a perfect let. And so is that on the 1 minute. Like, don't underestimate that shit. It's so crazy. Again, this is the inducement. Perfect timing, builds equal lows. Of course, break of structure would be better, but it did not. But guess what? Left imbalances, and you trade the let. Stop goes above the inducement. It's insane. It's insane, right? But yeah. And again, that's trades you should focus on and you should catch, because guess what? If you just catch this trade alone, that's a 1 to 15 if you aim for only Asia low. So what do you need? Like a 1 to 15, and after that, what is that? A 1 to 10. So you have 2 trades, 1 to 15 and a 1 to 10. Like, how much you looking for? Like, like what do you mean? Like, it's 25 risk to reward in literally like a day. If you just focus on this, let's say you miss complete this day out here. No problem. It was not clear. It was a freaking retail heaven. Look at that shit. Insane. But why you pull something out of your ass in here? Look at that. You're in the middle of nothing. This is the extreme, and this is the build-up in here. This is your inducement. If you look at the 1 hour, look at it. Build-up, inducement, smash through it. This becomes your extreme, but guess that. Build-up, this is your inducement. Same thing. Internal break of structure taps into mitigation. That's your next opportunity. Now you're waiting until you next valid supply zone in here. Guess what? Lon Asia range perfectly. When does it tap into? London Open. That's the stuff you to focus on. Focus on that shit. Completely ignore that shit. And that's again, why is the retail haven't happened in here? Because you have build up perfectly, equal lows, false reaction, inducement. Of course, what's going on? You don't need an Asia range inducement low here, because this is your inducement on the bigger picture. When did it happen? London close. Guess what? Trading the order flow. And of course, this day needs to be trending, because again, the next target is the supply zone. So that makes sense. You don't look for reversal trades in here at all on the bigger picture. This is your extreme in here. This is your decisional. It's already tapped in here. Right? So again, completely ignore that day, and then again you come in here, then you understand the whole bigger picture. You trade, focus on picture clean shit, and confirm it even with lets and stuff. Again, 1 to 15, 1 to 10, right on the edge. Again, it's easy stuff. Yeah, so there's trading opportunities everywhere, but you should focus on the cleanest ones. So that brings us back to our slides, by the way, which is, and now it's time for a secret weapon. I just gave you a little hint already, and say hello to my little friend, and that will be, again, like you should not trade. What was you remember the example of the American strategic bombing campaign? Again, it didn't went to the charts or the country and started throwing bombs like all over the freaking country. No. What do? They pick a small little fraction and they focus on that. That's what you will gonna do. You focus on the cleanest shit of the cleanest to trade every single day like 15 times. Of course, you can understand and see the reasons like why it could happen, of course, but there's no point of like trading 15 times a day. You don't need to do that. Focus on the cleanest shit, risk a proper percent on that, catch your 1 to 10, Main, what do you want? 1 to 10 and 1%. Like trade bigger accounts and pass like trading channels if you don't have the capital, right? But that's your goal. And of course, we'll dig into day 4 about building a trading plan. But again, it's important to understand like the internal picture. But again, for example, if someone asks me like, oh, why does it react from here? Like, why is it important? Why is it important why it directs from here? Like, technically, I can explain you like why it directs from here, because guess what? You have your minor inducement here, which does not induce anything to the left. Guess what? You're trading the order flow. When does it happen? Magic manipulation minutes to the minute mitigates this order flow. Awesome. But guess what? Like, why would you trade that? You can trade it. I showed you multiple times that I trade this shit all the time if I sell in here. But why would you do it? It's not a Mona Lisa trade. So focus on the clean shit like in here. And with the clean break of structures and the perfect mitigation with the perfect lets, timing confirmed, higher time frame confirmed, everything. And that's how you're making a proper business out of it. Of course, understanding everything is amazing, but guess what? You don't need to understand everything. You don't need to do it. Okay? Awesome. Random rant though.